What's up, Banter fam? Welcome back to the show. In today's show, I want to talk about regional investing and a trick that not many investors use, but definitely should to get an edge on the market. And that is investing in coins that are synonymous with certain nations as a proxy bet to capture upside from that nation. Now, I know it sounds a bit strange, but I'm going to be getting into this show exactly how you can do that. Before we get into that, because I think it's very interesting, and then at the end, I also have a very interesting segment about this mysterious Bitcoin dormant wallet waking up scenario that is currently occurring with millions of Bitcoin starting to wake up, dormant Bitcoin now becoming active. I also have a lot of stuff to do with altcoins, ordinals, all sorts of fun stuff at the end. Before we get into all that, let's talk about the market. So I want to do a quick couple minute market rundown. Then we'll get into regional coin investing, and then we'll get into altcoins, and then Q&A at the end. That is the structure of today's show. I want to basically break down Bitcoin price action and TA very simply. I know in the show sometimes we get complicated and we look at like really short time frames, but I just want to frame very, very simply, very basically where we sit. So I've gone all the way out onto a 1 yearly chart, and you can see on the 1 yearly chart, this is a very key level. This $29,000 level is extremely important because it was the yearly open and the yearly close for 2020 to 2021. Then obviously 2022 we shot straight through, and then we're coming up to test the yearly open again now. So this is quite a key level. Now, obviously, the higher the time frame for Bitcoin technical analysis, generally the stronger that resistance or the stronger that support becomes. You can also make the argument now that this area is very strong support for Bitcoin around the 15 to 18K level, because it's been basically a yearly open as well as a yearly close for Bitcoin. So this level is quite strong support, but similarly, as you can say that, you can also assert that the area of the 29K region is very strong resistance, this level here. So I think that's important. It's just an important thing to contextualize, because we just had a massive move up into very significant resistance, and we've wicked above, and we've had a pullback on the 1 yearly chart. Let's now zoom in a little bit. Let's go onto the weekly chart. So we'll get a bit more a clear idea of the Bitcoin trend going on to the weekly chart to see exactly how we reacted in this zone. And we could see that we did reject off the 29K yearly open level, but we actually did wick above for a short amount of time into weekly resistance at 31K, because the thing to realize about resistance is that it's never linear. Just because the yearly opens at 29.1 doesn't mean that 29.1 is the ultimate resistance. It's usually in ranges, because think about how sellers actually sell their Bitcoin. They don't put in a whole order at 29K. They'll usually stagger their orders 29, 25, 30, and then buyers as well gain confidence the higher you go. So the important thing to note about resistances and supports is that they're ranges. That's why we can draw in blue boxes like this, which cover a 5% discrepancy either way, because usually price tends to stop or price tends to bounce in a general range. And that can explain why we did actually break above that yearly open level and then come back down below, because it's a rough resistance level around the yearly open. It's not a be-all, end-all number. So for Bitcoin on the weekly chart, just to summarize it really simply and break down basically what I've been talking about over the last few weeks, but in similar terms, what's happening with Bitcoin right now is you can see this diagonal trend here. This is the first thing to note. So we have our horizontal levels. We also have our diagonal level. So I'll talk about the diagonal first. This diagonal level has been a level that has acted as support. We flipped and it acted as resistance for a push down during the FTX collapse to range lows, actually deviation below range lows. Then we saw a push up. Once again, multiple rejections off the diagonal before we push through, and now it is acting as support. So for Bitcoin, on a weekly chart and also on the daily, what you want to see is Bitcoin holding this orange line here. This orange line is the general diagonal trend. You break down below this line, which is what we're flirting with. We did, you see, have a little wick below, but once again, the line's not a be-all and end-all. It's more of a general indicator of momentum. You break below this line and confirm below on the weekly, then there's a very strong possibility we're coming to range highs. That is your next key support level if we draw the horizontal in. And in fact, if you want to draw it in even more like exact, you would probably say 24.3 to 24.4 is that level, but I've drawn a blue box to exemplify the general range here. So I think if we break down below this orange line, range high becomes a real possibility, and that is your next very strong buying level. But if we go into the daily, we can see we do have a little bit of support here. We're still above the orange line. We also have key support at 26.5. We don't want a weekly close below 26.5 because that would break below our orange diagonal. But a bounce and a test of 26.5, I think, becomes likely over the next couple weeks. And this is a zone that isn't really a level to panic at. It's a level that we certainly need to hold, but I wouldn't be panicking if we come down and test as long as we push back up into our blue box. So that would look something like this. So a breakdown, test at 26.5, and then a push back up. That's okay. If we see this thing start to happen, like a kind of a dead cat bounce, and then a retest, and then it's flirting with this line, then that's a really bad indicator that we are going to come down and test range highs. The signs right now are pointing to the fact that Bitcoin wants to get there. It looks like a bit of a magnet, especially if you go into the weekly chart. It looks like it's a bit of a magnet, but I don't want to let bias get in the way of my investing. I think it's important to remain objective and say, look, we are still above the orange line. It depends how you draw it, because if you draw it like this, we're just breaking below. That's the problem with lines. They're subjective, but look, in general, we're still around that area. And if you go into the daily to get some sort of confluence, then in general, we're still above 26.5. But definitely just beware that breakdown is likely to take us to this 24.3 region. And you may say, oh, that's, not too much of a pullback. It's not really in the Bitcoin scheme of things. It's not much at all. It's 8 to 9%. But for altcoins, a 9% pullback in Bitcoin, let's say Ethereum pulls back 12% because it loses some dominance on ETH BTC, which has been trending downwards, as we can see. Then alts might get hit 20%. So it actually becomes quite a big buying opportunity for altcoins. Some are down 20, 30%. Some will be down 40, 50%. But you could expect around the 20, if we do get to range highs, or just below at 24.3, you could expect roughly a 20% pullback for alts. That is that scenario. Of course, you also have the bullish scenario. There's never just one scenario in the market. The market's showing us that maybe it wants to come back down, but there's also a scenario that we actually had quite a nice wick here in my blue box. So what I want to see, and this is what I told you on the show yesterday, I want to see a bounce above and then a retest. On the retest, that will give me a much better idea of momentum. That will show, okay, this is actually a strong level for buyers. Buy volume comes in. We see a pump once some volume comes into the market, because if we actually look at the volume, it hasn't been great. It's dried up. Look at the volume over the last couple of weeks. Look at early March. Look at that huge green candle of volume. Even the sell volume on March 22nd. This was big volume, and we're just chopping in a range. Sure, we did have this major pump, and this was the majority of the volume in early March, but even here, decent volume, right? Just chopping in a range. Just back and forth volatility. Look at how the volatility has been crushed over these last few days. Yes, we did have a big sell event on the 19th of April, but over the past 6 days, volume has dried up. So what I want to see from Bitcoin is a bit of volume kick in, push to the upside, and then a retest. That is your bullish scenario. If not, I think expecting lower is not a stupid thing to do, just because, I'm trying to be pragmatic and go based on what the charts are telling us. On the Ethereum side, because Ethereum is very important for alts, and, I am going to get into the crux of this video, which is the regional investing theory, but I want to go through the charts first. On the Ethereum side, we are seeing a breakdown. So similarly for Bitcoin, if you want to draw your orange line in, Ethereum actually, this line, a base structure a bit better than Bitcoin's, in my opinion, because you've got a pretty clear test at 1470, rejection at 1570. It held at 1619, then at 1689 again, then it bounced at 1838 again. It's a decent level for ETH. So that has bounced multiple times, and now it's starting to break down. And you also have this blue line here, which has been our the level that Ethereum respected on the run up. So rejected multiple times here. You could see huge area of resistance. Then once we broke above, we did an SR flip, support resistance flip, bounce, push to the upside, come back down, and now we're actually breaking below. So you could see Ethereum, if we zoom in a little bit, is actually starting to break below not only the orange, but also the blue line. So for me, this isn't the best sign in the world for alts, because you want a strong Ethereum for strong alts. Bitcoin holding up a little bit better than ETH, but this certainly is not like an amazing sign for Ethereum dominance. And look, if we look at the ETH Bitcoin chart, this is like the most important chart for altcoins alongside Bitcoin dominance. we can see that we currently we did wick above mid-range, but we're currently closing below on the weekly. Weekly candle closed below mid-range. And anytime that we close below mid-range, I think it's logical probability-wise to expect, considering this has been a general downtrend, you can see we're making lower highs, lower high, lower high, lower high, lower high. It's logical, if we're just trading with the trend, to expect the trend to continue. Now, of course, it could flip, and if it flips, we'll know, because what we'll get if it flips is, and I'm drawing in a very rough line, but if it flips, well, what we're going to see is a reversal, break above this diagonal, bounce on mid-range. So we're going to see a bounce off horizontal support, and then we can look to target the 8th level, which would be great for altcoins. But until that trend breaks, let's just assume it goes down, right? Because the trend is your friend till the end of the trend. So if we're following the trend, and look, it's just a very rough line to contextualize the trend, though, we can see that ETH BTC wants lower. And if we do put in a target, we can draw this as a range. Let's just assume we're in one big range, chopping sideways like this. We can assume that ETH BTC is actually targeting 5.7. Now, this isn't a huge pullback. This is a very tight range compared to old ranges. It's 15%. Doesn't mean ETH's going down 15%. Just means, ETH will lose 15% versus Bitcoin. So this is something that we've seen many times before. We've seen way crazier moves. Even, at the start of this year, mid last year, we saw a move of 60%. Even this year, though, if we want to go into more of a recent climate, we saw a decline of 15% in March. So when Bitcoin pumped, ETH already moved 15%. So this is the important structure I'm looking at. Of course, I want to see ETH break the trend here. And if we look on the daily, we did get an important break of this blue line, but unfortunately, we didn't make a higher high. We are actually making a lower high here. And we got rejected of 6.7. So that's just something to watch on the daily. Of course, you've got this level to bounce at, which is 6.4. You bounce there, and look, it could look something like this. You make this level, you turn this level into support again. Then you break above. Then what you actually need to see here for the continuation is a higher high. So the lower we go, the higher we're going to need to go on the bounce. So if ETH BTC comes here and then fails to break above resistance again, then you can assume we're coming back down to lows. So it all depends on the reaction in this zone. I might actually bid on some alts at 6.5 on a bounce, right? Because you've got clear invalidation. If we break below, it's fine. I'll just rotate back into BTC. More of a rotational play than a USD play. But if some alt setups look good, right? And I line it up with ETH BTC, I'm actually comfortable buying some alts here. That would be after a 2% pullback. So let's just monitor this. I'll keep you updated on the shows, of course, whether that time comes, if we do see continuation. But the general trend for ETH BTC is bearish. Now, of course, if this flips, alts can perform really well, and I'm willing to reassess the thesis. But that's in general how I'm feeling. There are a select few altcoins, though, that are starting to look quite good. I'll talk about some of them at the end of the show, as usual. But that is generally what I'm seeing for ETH, and this is generally what I'm seeing for Bitcoin. And just disregard the red stuff. That was a scenario I outlined before. This is the level you need to know. And on the weekly, this is the rough trend that you need to know. So that is basically where we're sitting for Bitcoin for now. And look, this diagonal, you can draw it whichever way you want. You can draw it here, and we're bouncing on support. You can draw it a bit higher and try and capture this diagonal crossover with range highs and say we're breaking below. Either way you want to put it, we know we're at key support on the daily. And this is a general indicator of us starting to lose momentum. But you could say that we're just holding up for now and haven't lost full momentum yet until we do get a weekly close below, a conclusive weekly close below, because that you can change the angle. I want to remind you before we get into the regional coin thesis, it's a pretty cool trading strategy, by the way. I want to remind you that we are doing the ByBit competition in a day. So this actually kicks off, I think, tomorrow or 2 days if you're in the US. And essentially what this is a trading competition, P&L based, with first prize winning a Tesla, second prize winning a Rolex, third prize winning $10,000. So we have 716 people signed up. It's actually not that many, guys. So if you aren't involved, the less winners, the higher chance you have of winning, of course, and making that top 10. It's based on P&L. So it's $250 minimum dollars to trade with. But let's say you do 100% trade with 250, and let's say you turn 250 into 500, then your P&L is 100%, right? If you start with more money, you'll need to make more. It's all proportionate based on your trading size. We've done that to make it a fair game because we know not all of you have a lot of money. You might only have $250 to trade with, and that's fine. And we know some of you are whales and you'll trade with 50,000, and that's also fine. It's P&L based. Highest percentage wins the Tesla. Obviously, we do have bigger prizes as well. Obviously, the Rolex 10,000, but then below, we've also got $4,000 for number 4 to number 10. So that trading comp's kicking off tomorrow. If you do want to sign up and get involved, we're doing it with Gareth Soloway's community as well. You can register using the link in the description. Just click on this register link here, and it will bring you to the portal. If you haven't signed up, you can sign up through that link and then register for the comp. If you don't have a ByBit link, there's also a link below that because you need to be on Banter's links in order to qualify for a ByBit account. You also get a $30,000 sign-up bonus depending on how much you deposit if you use that link as well. So yeah, link in the description for the trading comp. Sign up, register because it is kicking off tomorrow. I'm going to be opening some trades on the shows. I'm going to wait for some good setups. I'm relatively impartial because it's a Tuesday. We haven't gotten major earnings yet. A lot of the major earnings are towards the back end of the week, Wednesday, Thursday, Friday. I think that is going to impact the market as we'll get a better idea as to how the labor market's tracking more anecdotally because we don't have, quantitative data based on the jobs market yet. I think that's next week or as US jobs report this week. Either way, it'll be very interesting to see the lagging effect of interest rate hikes on layoffs. To see if these companies are actually laying off and see what their growth is like. So that's going to be a big day because right now Bitcoin relatively stable. And as I said, the volume's dried up. And if we look at the NASDAQ as well, relatively stable. S&P actually coming into resistance a little bit, in my opinion, at the 4,200 level. I've drawn it at 4,160. You can also do it a little bit higher here. But in general, we know we have tested multiple times and got rejected. We did come above briefly at the 43, but then came right back down. And the rejection here was a catalyst for a huge pullback in last October. Recently, just been chopping in this range. So a conclusive breakout of the S&P/NASDAQ would be very strong for crypto because if equities perform strongly, I expect crypto to follow. But also, we have to keep in mind that there's a possibility we get rejected here, come back down to range lows, which would be a 6% move. So I think the market's tentative. The stock market's tentative because everyone's looking at this 4,200 level on the S&P, and buyers are very indecisive as to whether they want to actually get into a long position here into resistance when they could just wait for confirmation. So there's a little bit of tentativeness in the market. One interesting thing to note is look at the volume for the S&P. Always super strong. Whereas in crypto, you get this. S&P is relatively consistent Monday to Friday, right? Whereas in crypto, you get very volatile volume, which makes certain weeks better for trading than others. So with the trading comp, we do want to see some decent volume for alts. When we start seeing that, either short or long side, by the way, I'm not afraid to short alts if we get some good short setups, but I want to see some significant volume. Hopefully we get it, and then we can use that to our advantage for the trading comp. So yeah, link in the description to the trading competition. So I want to get into my regional coin thesis, and then I want to talk about at the end, it's actually quite a big segment. You can see I've got like 50 tabs because there's a lot to talk about. Ordinals, Bitcoin dumping, all sorts of stuff. Stacks, a liquid staking market, ETH, lots of stuff to talk about. But before then, I think this is really important, and this is understanding regionality. I did a thread on this yesterday. I want to elaborate on this a little bit more and give you my verbal insight because there's a few things I couldn't explain in the thread just because it wouldn't make sense in written form that I want to explain here. But if you haven't read it, I recommend reading it. It's on my Twitter. It's about regionality in crypto. You can bookmark it and have it there as a guide. Basically, it's the concept of regional coins. I think a lot of people disregard this concept. What a regional coin is it's a coin that has an affiliation to a specific country or nation state based on either a loose or a strong tie. So a loose tie would be, let's say, the founder or the team members from that nation, or several team members are from that nation. Let's say, Emin from AVAX is from Turkey. So AVAX is popular in the Turkish community. That would be a loose tie. The other loose tie would be the coins heavily traded in that region. So, if you want to go onto Upbid and look at like Arbitrum, a very heavily traded coin in that region, you could say, oh, that's become like a Korean coin, or Aptos would be a better example of that because Aptos has been like a meme in Korea, has a lot of volume in Korea. So you could say just because the coin is heavily traded in a region, it can become synonymous with that region. That's a loose tie because clearly that's going to develop a retail investor mindshare that this coin is nation affiliated, but maybe it doesn't necessarily have like so much substantive logic underpinning it. A stronger set of logic to determine whether a project has a national or regional tie would be government support. So active government support, where a government is backing a project and actively incentivizing a project, I think is a stronger tie. And then you also have local ties to specific organizations. So this would be when a project deeply roots itself in the local economy. Think like, I know it ended up badly, but think Luna and Chai payments. Like, sure, it was a bit rubbish in the end. The partnership was a bit of a nothing burger, but what it did was it developed a very strong community in Korea, and it got the Terra name out there, and it made the local community very supportive of the Terra project. And I think you can't really underestimate the importance of developing a strong base in your home nation or in your hometown to kind of underpin a strong foundation for future growth internationally. So there's loose ties and there's strong ties, but however the tie is made, it boils down to this. Why a coin is viewed as having ties to that nation is much less important than the fact that it does. So it doesn't really matter if it's loose or it's strong, as long as the general public views a coin as being regional, then it becomes regional. If people view CFX being a Chinese coin, it trades like a Chinese coin. Something happens in the Chinese economy, it may follow suit. If people view AVAX as a Turkish coin, it might not be Turkish, it might be American or European, but if it's viewed as Turkish, then it will trade like a Turkish coin. If something viewed as a Korean coin, an Italian coin, you get the picture. It's not really about, obviously, the stronger the tie, the more longevity that narrative has, right? So if it has a really strong government tie, it might be synonymous for years. But if it has a weaker tie that maybe is a short-term catalyst, like extreme trading volume and trades like a meme coin like Aptos, okay, maybe it doesn't have 5 years of longevity as being a Korea coin, but maybe in the short term it does. So maybe in the 2 to 3 month time frame it does. So why does this matter? Why does it matter if a coin has regionality? There's two major reasons. The first reason, and this is one of the more tradable reasons behind this thesis, is that coins can be used as a proxy to invest in a specific nation. So think about this, right? China, they announced liquidity provisions last year. What the liquidity provisions were essentially buying bonds, pumping money back into the economy, a form of QE in China. When they announced those liquidity provisions, let's say you were an investor and you wanted to invest in China. You're like, oh, wow, China's going bullish. They're injecting liquidity. This is going to cause a Chinese market pump. How do you get exposure to China? There's a few ways. You can go to your stockbroker and you can invest in Chinese stocks through, like let's say if you're in America, Robinhood or something like that. I don't know if it's all accessible, but there's usually indexes that allow you to invest in like a broad index of Asian funds. We have that in Australia. You can also purchase like real estate, but you can't directly purchase real estate. You'll have to invest through a REIT, and that would need to be like a commercial REIT. So it's usually harder to get residential exposure, and then you're paying like a bunch of fees. Then you also have like the bond market. This is only really relevant for like a cash equivalent if you were like de-risking. So if you wanted to go risk on, I don't know if bonds are necessarily the way to go. So essentially, like investing in China, if you wanted to capture upside to liquidity provisions, this is very difficult. And it's the same thing with AI, right? The reason AI crypto is pumped recently is because it's difficult to invest in AI stocks. It's more difficult. There's more of a barrier to entry than just opening a brokerage account, like even some with non-KYC, and just like buying crypto. It's much easier to buy crypto than it is to buy stocks. So the reason why crypto can be used as a proxy investment, if it's regional, to invest in a nation, is because it's easy and liquid versus stocks, real estates, and bonds. So when the Chinese liquidity provisions were announced, we can see here the Chinese central bank really started easing in December, Jan, but the news started really hitting and circulating in mid to late Jan. After that announcement, we can see here like some of the tweets at that time. It had a huge pump. In fact, it's monumental, the pump. It was 1,662%, almost a 20x because of the liquidity provisions. Now, if you were fast and had your finger on the pulse and you saw, okay, the Chinese are injecting liquidity, I want exposure to China. I don't want to buy stocks. I want a higher beta play. So I want something that can exceed or outperform. then, I mean, crypto is your best bet, right? Because it's liquid. And as long as the coin is synonymous with that nation, you might get a pump. You might catch an early narrative. And that's what people did on CFX. And they did it on, I've got a list of Chinese coins here, by the way, in my watch list. They did it on a bunch of these other coins. And some of them were, super strong gainers over that period. So the only way to position yourself to get exposure was to know which coins were synonymous with which nation. If you didn't know which coin was synonymous with which coins were synonymous with which nation, you wouldn't have been able to make that trade. So you need to have your finger on the pulse in terms of being able to determine if a coin is regional, and if it is it gaining traction in those circles. So investors can use proxy coins or regional coins as a way to capture upside to investing in the Chinese narrative. This can be based on a real economic event occurring. So let's say like something happens in India, they announce liquidity provisions. You might want to get in some Indian coins, or you're seeing like, it might even be crypto specific. You're seeing like Abu Dhabi starting to do Web3 initiatives. Maybe look at what projects they're partnering with. But the whole point of this video is to get you out of the mindset of just investing in this US echo bubble, which is Twitter and YouTube and all these other US based resources, because we always talk about the US coins. And I say we just as a general as a general representation of like the Western world, because I'm in Australia. So we're also focused on these Western coins, and we forget that some of the biggest developments happen overseas and internationally. In Hong Kong right now, with some of the Web3 investment they're getting, in the Middle East, that some of the investment they're getting. US regulation is driving a lot of talent offshore. A lot of other nations are now starting to get involved with crypto. This is important stuff, and that is why not only real economic events can affect crypto prices, but also like nation-specific legislation and initiatives can affect crypto. So next time you spot a major economic development or a crypto-specific development, think about if and how certain coins could be affected. Sometimes they aren't affected. Sometimes they are. You need to work out whether that coin fits that purpose for the exposure you're trying to get. There are also many other trivial reasons, because the thing is, crypto doesn't really rely on fundamentals. It relies on pumpermentals. It's still a very inefficient market. It's a nascent market. Coins pump for seemingly no reason. Memes take off and pump better than actual coins with great fundamentals. We've seen this over the last few weeks. More meme coins are being created a day right now than in 2022, statistically. Start of 2022 when the market was bullish. More meme coins are being created now. So the market's pumpermentals are so clear. So you don't just need to invest in or trade CFX to capture upside to some sort of economic event. There's also very trivial reasons why why coins gain momentum in specific circles. Think about Aptos. So Aptos gained a huge amount of steam on Upbit. One of the reasons for this was there was a meme at the time, and this started doing the rounds in South Korean circles, which was one Aptos equals one apartment. This is one of the reasons behind its 500% rally. The reason there was this meme, one Aptos equals one apartment, is because property prices, real estate in Seoul, the capital of South Korea, are very expensive. Millions of dollars, just like we're seeing in a lot of other capital cities. A lot of people, especially first home buyers, have been priced out of the property market. So Aptos, APT, the ticker, is short for apartment. It's an abbreviation that you can make for apartment. So there was a meme going around in Korea that one Aptos equals one apartment. Very stupid, just because it's called APT, but stupid stuff sells. And this resulted in Aptos almost being treated as a meme coin for a specific period. Now, the meme status of Aptos happened after its initial rally. That rally was a combination of increased international interest in Korea and also a massive short squeeze due to a lot of shorters trying to short based on long-term FDV, although it didn't really matter in the short term. Low circulation resulted in the Aptos price rocketing post-airdrop. But the APT apartment joke certainly like added fuel to the fire a little bit later on. So if a coin is being traded in a region as a meme, or even if it's just a hot trend like Arbitrum being a hot trend in Korea, it can also be considered regional for that period of time. So the coin doesn't need to have roots in China or roots in the Philippines or roots in Australia or roots in America to be American or Chinese or Philippines or Australian. It just needs for a specific period of time, especially if it's a trade, to be considered regional. And that can happen after an increase in volume or a coin gaining meme status in a country. Like Aptos wasn't a Korean project, but it inadvertently became synonymous with Korea due to this. And since then, it's been one of the highest volume traded coins in the Korean market. By the way, I did write a Upbit trading guide if you haven't checked that out. which shows you how to catch up-bit pumps early. So coins may not have a direct link to a specific nations, but all it takes is the market to perceive it as so for it to trade accordingly. So how can you work out what a coin's ties are? How do you work out whether a coin is regional? How do you find regional coins? This is a good question. Basically, I've broken it down into 3 steps. 1, you want to monitor where the token's traded. So analyze the trading volume. A lot of this has to be done manually because there's often not an aggregator of where each token is trading on each platform. For the bigger coins like Bitcoin and Ether, you've got the data. Even like XRP, like coins with major listings, even AVAX, you can get the data. For the smaller coins, it's harder. What you'll need to do is analyze specific exchanges. CoinMarketCap has this. Like you can search 𝗕𝗏𝗃 and get stats for that. You can get stats for BitGet, Binance, basically any exchange, right? And you could have a list of like 6 countries and track their top exchange, because their top exchange will generally represent the percentage breakdown of what coins are being traded and when. You can have a list of all these exchanges, and then you can monitor these exchanges based on trading volume. That's the first thing you can do. The second thing you can do, and this is actually a really hot tip that not a lot of people do, but I do, is go into LunarCrush, right? So like this, go into LunarCrush. It's LunarCrush. It's an amazing website, by the way. And I think not a lot of people use it in crypto, but it's very good. So you can go to LunarCrush. And then what you can do is you can find a token. You want to work out whether it's regional. Let's go to Tron. I don't know. I'm just picking a random coin. Let's go to Tron. What you can do is you can look at the top creators tweeting about Tron. So there's a section for each coin that says top influencers. Click on view more, and you can work out what countries these guys are from. So go into their individual pages and work out where they're from. You'll know this usually because of language, or they might even say it in their bio. There's telltale signs that they could be from another country. So even like VeChain, you can go into VeChain. You can click on show more, and you can work out what kind of guys are tweeting about it. Work out where the general social activity and social commentaries coming from. By the way, LunarCrush does a great job of aggregating social engagements, like all the metrics, social engagement, social dominance. You can see an uptick in tweets before it even really pops off in price. So it's a good website to use as a hot tip. But that is another tip. Look at LunarCrush, look at data, see what countries the biggest contributors are from. That can help you work out where the biggest communities are from. And even if the creators are from America, go into their comments, go into their latest post and look at, okay, where are their commenters from? Are all their commenters from Europe? Are all their commenters from Turkey or the Philippines or America? Work out where their followers are from, and that'll also give an idea of where the communities are from. You can do the same thing with the projects' Twitters as well. Now, keep in mind that Twitter is largely US-based because it's a US-based company and it's not actually legal in every country. It is a bit of an echo chamber. So when you're looking at Twitter, keep in mind that there will be a skew towards the Western side of things. So make sure you kind of scale that in your head percentage-wise. So, if you're seeing 10 American commenters and then 5 Japanese commenters, even though there's half the Japanese commenters, it's probably an indicator that there's more than half percentage-wise that are interested in the coin, just based on the split of the demographic of Twitter being more geared towards the US. The third step is decipher how a project is being identified in your circles. This is the most important step. This is also the most subjective step, because what actually matters is the perception here. I said this before. What matters is why the market perceives a coin as being regional, not if it's regional or not. So define how this project is being identified in your circles. So if everyone is talking about it as a Chinese coin, even if it's not, it inherently becomes a Chinese coin, right? So it's very important how the countries with the most trading volume, like America, view a coin. Because if everyone thinks that a coin's like Turkish, then it'll trade like it's Turkish, right? So this is a very important step. You want to monitor how it's being identified in your circles. There's one interesting point. I said I would break it down into 2 points. There's a very long first point. There's a second very important point behind why regionality matters in crypto. And this is because the stronger a project's base is, the more leverage it has, the stronger foundations it has to actually expand. If you're building a house, if you want to build a massive mansion, you need very strong foundations to be able to support that weight. If you're building a commercial building, 100 stories, and you have weak foundations, that building's going to collapse. The foundations are really important. So when it comes to projects, it's no different. Disregard the investment perspective for a second. Think about it from a project perspective, because once again, investment comes secondary. The health and the success of the project itself matter the most. That leads to gains later down the track. For a project to be successful, having very strong local ties is a very important prerequisite. Now, it's not always needed. There are some projects that launch and they go international and it's whatever. They're kind of a mosh posh of like 10 different countries and whatever. They're based internationally. Sure, that works. But I've seen the most powerful gains come when projects have a regional tie, at least on the more centralized side of things. So like, sure, a project like Ethereum or Bitcoin, or even 𝗕𝗏𝗡𝗚, although it kind of has Turkish ties, we'll get into that in a second, but even a project like 𝗕𝗏𝗡𝗚 or like Solana, I'm just being broad here, they want to be viewed as decentralized. They don't want to be viewed as like having ties to one specific nation, because they're trying to be immutable networks, right? But having the backing of a nation is a different conversation, right? Because having the backing and support of a nation can act as a springboard. Luna did this very well in Korea. They had a partner, as I mentioned before, they had a partnership with Chai Payments, which was very successful. And that helped them give leverage to actually grow. 𝗕𝗏𝗕𝗃, who gave me the idea to write this thread, had an interesting analogy that he made, likening regional coins to soccer teams. He said, think about a sports team like Manchester United. It's a local team with the local city supporting it. Then it goes international and has fans everywhere. If it's a good product, it can expand. But it also helps to have a strong local base. I think it's good to travel and talk to people from different countries and understand what's hot locally. It's easier for a localized community to become globalized. So that's the rhetoric I'm trying to push here. It's much easier for a project with strong local ties to become globalized, strong partnerships, a strong base. Manchester United, they didn't just become an international soccer club. They had that loyal 10,000, 50,000 fans from Manchester that were just diehard fans for decades. And then that passion spread. It proliferated into other countries. It's so important to have that base, not just in sport, but in crypto as well. So a few points here to tie this up, to tie this whole regional theory up. How can you make this thread actionable? One, be aware of where a project's linked. I won't go too much into it because we already talked in specifics before, but be aware of where a project's linked. It's important because if you want to take action based on an event, you'll need to know. Two, look for projects with a strong regional and local base. We established that a strong foundation is important as a springboard for growth. Three, when big national events occur, consider using crypto as a proxy investment, a liquid, easy, tradable investment, or speculate on others intending to gain exposure. This is an important point because you might not even give a shit about exposing yourself to a Chinese liquidity provision, but if the market does, then you can trade upside to that. You don't need to care. If you're speculating on other people speculating, that's good enough to trade. That's 99% of crypto, to be honest. Like conferences. It's a classic thing where we see prices run up ahead of crypto conferences, then sell off. You're speculating on other people speculating. And then you just sell before the speculation unravels. You sell before the Ponzi collapses, basically, in a trading sense. The death spiral kicks in. So speculating on other speculating is a way to make money in crypto. And it's the same with regional investing. If other people view a coin as regional and pumping for a specific economic reason, you can trade upside to that without having to buy in or believe in the underlying reason, because other people will. They'll do it for you. Number 4, spot regional trends early to find opportunities. As I said, Luna Crush was great for that. Social data is great for that. Volume data is great for that on different exchanges. Come up with a list of different exchanges from different countries and have that. I think this is important. So yeah, that's my introduction to regional coins. Going to get into altcoin talk now and Q&A and all that stuff. But I thought it was an important introduction. If you want to save and bookmark this thread, it's in my Twitter and you can check it out there. So let's move on to a couple of interesting altcoin stuff. There's a few interesting discussions to have actually. By the way, on the Hong Kong thing, they just announced that you can actually hold crypto as property in a trust, which I think is very important. Noodle of BitREx said, as June Hong Kong legalization is right around the corner, I expect Asia-fueled rally after this correction is over. Chinese banks opening their cracks for the first time to crypto ownership is not a effing fade, you idiot. very strong. Obviously has a lot of Chinese coins. But look, if they're right, then you want to have a list of Asian coins. I've got a list of Chinese coins. I've got some kind of Hong Kong stuff in there as well. As I said, it's all just like perception based. So not all of these coins are based in China, but as long as they're perceived as Chinese, that's what matters. So that's an interesting point to make. All right, let's get into altcoins now and have some fun. There's a few interesting discussions to have. I also want to remind you, as well as the ByBit Trading Comp, we have an OKX giveaway. So it's not a comp, it's a giveaway. So if you open at least $1 worth of trades on the OKX exchange, you can qualify this week for a Maldives holiday or $7,500, whatever you want. You can go on the holiday, have a lovely week away, or you can take the money and do whatever you want with it, trade with it, go on another cheaper holiday, I don't know, whatever you want to do. And then on the 2nd of May, for 3 weeks, we have a Tesla giveaway. Now, I mentioned this on the show yesterday. The Tesla prize on OKX is actually bigger than ByBit, and you don't even need to win the trading comp to win the OKX prize. All you need to do is trade $1. Of course, the more you trade for the Tesla, the higher chance you have of winning. So $10,000 equals 5 raffle tickets. So the more you trade, the more chance you're going to have of winning the Tesla. But it's pretty crazy. The reward is the same as the ByBit reward. It's actually more. It's $10,000 more, or the Tesla. So yeah, that's a bit of alpha for you guys. And also, well, not really. I mean, it's alpha if you participate in the giveaway. The other interesting thing is I think the OKX comp has less participants, less people in the draw, so higher chance of winning as well. Obviously, ByBit's going to be a lot of fun. I'm not saying don't join that. Why not do both? But if you wanted to just, I don't know, participate in a giveaway, then OKX is, I think, a decent option. So yeah, big giveaway, massive giveaway. I know some of you guys get sick of us shilling the giveaways, but like, I don't know if you realize the magnitude of this. Like, it's like almost $100,000, $150,000 cumulative between the two giveaways. That's massive. What other crypto channel does this? It's huge. And yeah, I just think it's like, I don't know. You decide, but I think it's a decent giveaway size. So there's a link in the description for OKX. If you want to sign up, you need to click that link to register. I just want to make it clear. Click that link, sign up through the link, and then on the homepage, you can click join. If you click join, then you will register for the comp, and you'll be able to see how many raffle tickets you accrue on this dashboard. So use the link, sign up, and deposit money, open a couple trades, and you can qualify this week for the Maldives, then for the Tesla. So I'm giving away this on my show, actually, on just after May, probably on the 2nd or 3rd of May. Okay, that's that. Let's get on to some interesting stuff. I'm going to read the comments as well for a little bit. Stacks has been a champion. We're going to talk about Stacks today because ordinals are popping off. In fact, let's do it now. Let's talk about ordinals now while I'm on the topic. Where is this conversation? Sorry, I don't even know where I've put this. Hold on, let me try and find this without spoiling the rest of the show. Okay, I got it. No, I don't. Okay, I got it. There we go. All right, so if you go into Upbit, I don't know. I find Upbit volume super interesting. Okay, you've also got Binance volume. Hold on. Binance. Why isn't this working? Binance. Oh, my keyboard's dead. Great. So I can't actually type anything, but I can still run the stream. But my keyboard's actually dead. So I can't actually type anything. Sorry, guys, but I can look. So I'd love to search Binance, but I can't type it. So if you look at the Binance volume, you'll also see an increase in Stacks. Stacks is the 4th highest volume traded on Upbit. So it's starting to gain momentum. Why is Stacks gaining momentum? Because it's a Bitcoin L2. And it's a very strong narrative off the back of this. This is insane. Do not fade this. This is Ordinals Inscriptions. What an ordinal is it's basically like an NFT on Bitcoin, right? An inscription is a creation of a digital artifact on the Bitcoin network. We've now seen over 100,000 inscriptions in a single day, which is the most inscriptions ever on the Bitcoin network. Now, this was a trend in February. Remember this at the start of Feb? There was all this drama about Bitcoin NFTs and about Bitcoin DeFi and all this stuff. And then like now, we're almost 10x the volume of what we were in February, but it's not being talked about as much. And the price is down on a lot of these Bitcoin plays just because the narrative isn't as strong. it's still strong. It's relatively speaking, Stacks is still a strong coin compared to the rest of the market. And I'm always looking for relative strength in the market. You guys know how I like to trade based on narratives. But this is crazy, this inscription thing. Now, if you want to get exposure to inscriptions, obviously the way to do it, it's kind of like the NFTs, right? The way to do it is through inscriptions themselves. It's like buying an NFT project itself. If you want exposure to the NFT market, you're better holding a Bored Ape than you are holding Ethereum. But for a lot of people, you don't know how to do it. You don't want to do it. I really don't want to do it either. Can't really be bothered trading Bitcoin NFTs. So for me, I think just proxy picks and shovels are the best. I use the word proxy a lot, but it's actually because it's the best word in crypto, because it basically means accessing something through another thing. And in crypto, the way narratives work is nothing's ever direct. It's always like a second order effect. So yes, Stacks, you don't build NFTs on Stacks, but Stacks is in the same category as Ordinals and Inscriptions, so it'll pump if that trend is going off. Or just like, how Phantom pumps when other L1s are pumping. Just because it's another L1 and there's a block-based narrative, it pumps. Or just because, I can give a million examples. Just because 𝗕𝗏𝗚 pumps, because PYR pumps, because gaming has a resurgence. Narratives in crypto are everything. You know this by now. So because of that, Stacks, I think, becomes a decent proxy bet to things like Inscriptions. Now, there's a few other Bitcoin projects. I might do a full dedicated video on this, but I did see the upbit volume starting to pick up on Stacks, so I thought I'd mention it. Now, a couple things I want to mention about Stacks. The first thing I want to talk about is the Stacks USD pair, and then I also want to talk about the Stacks Bitcoin pair. So for the Stacks Bitcoin pair, my freaking keyboard doesn't work. How am I supposed to search this up? Fuck, that's so frustrating. All right, I've got the Stacks USD pair though. How can I do it? Can I use like accessibility or something? I don't even have a charger here. Sorry guys, I can't get the Stacks Bitcoin chart up. Use the on-screen keyboard. How do I get that up? Can I search it? Oh, but I can't search keyboard in Spotlight. So I can't even search up the keyboard to get the keyboard. If you guys could tell me how to get the keyboard, feel free, but I don't even know how to get it up. Anyway, I do have a portable charger in the other room. I'm tempted to get it, but I think we just continue here. So Stacks Tether, if we look at the chart, I am targeting... See, I'm picky when it comes to accumulation. So 50 to 58 is where I'd buy. If you want to draw in the trend, it's not an exact trend. It's not the best trend ever, but we kind of have a rough trend here. Just a rough trend based on a few tests. Yeah, it's a bit messy, but it's a rough trend. If we could maybe, I think we go a little bit further down, but if we get a decisive breakout of this trend and retest, given the fact we're on horizontal support, this would not be like short-term support. It wouldn't be a terrible place to long. I want to see some momentum. I can't even click delete on my keyboard. I want to see some momentum from Stacks first. I want to see the ETH BTC reverse first. I don't like buying altcoins when ETH BTC looks trash, but this is showing enough relative strength. People keep saying use the virtual keyboard. No one's telling me how to use the virtual keyboard. How? Because I don't know how to search up keyboard. What if I go into applications, then go name, keynote, start. I'm on Mac. I'm on a Mac. Anyway, it doesn't really matter because I don't really need to use it. So that's the first thing I'm looking at, Stacks. I'm always adding to my hot narrative watch list. Stacks is one of them. The next thing I'm looking at is the ETH validation, the ETH validator ratio. We can see that Shanghai, everyone said it was bearish. Everyone told you, oh my God, the unlocked ETH, it's going to dump, validators are going to withdraw. We're going to see ETH staked plummet, and it's going to be a sell event. It was literally the opposite of that. The amount of staked ETH is pumping. It's actually pumping faster than it was pre-Shanghai. So ETH Shanghai, lo and behold, and this is basically what I expected and what most smart people expected, was the ETH staking ratio to increase post-Shanghai. Option Command 5. You guys are telling me commands on the keyboard. Do you see how stupid that is? My keyboard's broken, and you're telling me to get the keyboard up by using the keyboard that's broken. It doesn't make sense. I'm not saying it's stupid, by the way. I'm just saying that comment's stupid, John. I'm sure you're an extremely intelligent, and at least you're trying to be helpful. At least you're trying to be helpful. But it's fine. I've got enough stuff up. It doesn't matter. If I was desperate, I'd run. I'd run into the other room. That's actually quite funny though. But yeah, Shanghai ended up being a bullish event for ETH. Settings, accessibility, keyboard. Okay, here we go. This is someone. Where's accessibility? Accessibility, keyboard. Nah, stuff this. I don't care. I'm over it. So I think what caught people by surprise though, because even though we knew the ETH staked ratio was going to increase over a 12-month period, what caught people by surprise, I think, is the fact that the amount of ETH deposited upticked very quickly after Shanghai. So the reason for this, because we thought maybe there'd be a bit of a lag, the reason why it happened so quickly is because ETH Shanghai enabling redemptions on the Beacon chain allowed stakers to feel comfortable staking. So previously, a lot of people held off staking. And a lot of people that were sidelined now feel more comfortable post 𝗕𝗆𝗚𝗕𝗧 or Shanghai upgrade. And that's the reason for this uptick. And the total ETH locked has now hit a new all-time high since the 𝗕𝗆𝗚𝗕𝗧 upgrade. So that's also super interesting. Someone said, I know settings, accessibility, keyboard is supposed to work, but I don't know. I'm on a Mac and it's being weird. It's fine though. It's fine. Don't worry about it. So the ETH deposits and withdrawals, we can see the deposits increased. The withdrawals, although there were a few withdrawals, certainly there were a lot of validators withdrawing, it wasn't as bearish because you had the staking side to counter out the sell side. So Ethereum right now isn't trading based on Shanghai. It actually pumped into Shanghai. This blue line Shanghai, it had a pump after Shanghai and then dumped. The dump was Bitcoin led. And interestingly, the stock market stayed the same. So Bitcoin has been outpacing the stock market recently, but over the last week, it actually dumped against a stagnant stock market. What this indicates to me is one thing. It's very clear. Investors aren't necessarily de-risking, maybe a tiny bit ahead of earnings because Bitcoin's like a riskier play versus stocks. But what it tells to me is that the leverage was too high. The degens were gambling too much. We could see on the liquidation charts, liquidations were insane. So for me, what it indicates more so than it being a de-risk event is that it was a liquidation event. And the leverage ratio is still fairly high. So if liquidations have a ways to go, even a short ways to go, there can be a continued correction. Any view on XRP? XRP is I mean, long term, it's not my favorite project. It has good and bad things about it. The good thing about it is it's been around for a while, so it has the kind of survivability that other cryptos don't have. So I think that's a strong selling point. The other strong selling point behind why I think there could be a decent short term run if alts start looking good, I think XRP can outperform if the legal situation comes to an end, which it should. I mean, we've been saying this every single month for the last year, but it seems really close now. I think that could be like a short-term catalyst for a pump. Long-term, though, I don't hold it. I just don't have enough conviction in it. I'd rather hold Ethereum. I'd rather hold Bitcoin. And I don't think XRP is a super high beta play. I don't view it as a 10x outperformer of ETH if the market does pump. So I have no reason to really hold it long-term, personally. But if the trend's right, I'll trade any coin. So if the trend's right, I'm not against XRP. I'll just put it that way. XRP to the moon, Simpson said. I don't know. Each to their own. I see the argument. I'm not one of the, I don't deny the argument. I just think there are a few major flaws with XRP, which we can get into it another time. Next few months will be interesting for Adam. Native USDC is coming soon. This is big, by the way. DYDX4 is launching soon. Keep your eye out for that. Cosmos IBC is expanding to ETH. I think this is one of the reasons behind the Injective pump. You guys know, like a coin like Injective seems to do a much better job at actually accruing value than the Atom token itself, or at least people think that, and that's why it pumps harder. But yeah, I'd be looking at Osmosis and Injective. Maybe not Atom specifically, just based on the tokenomics. But I mean, if you're trading Atom, it's fine. But Atom token aside, the ecosystem looks really strong. It's developing nicely. Really, really strong. Andrew Kang said, still believe ARB is set up for a continued rally later this year, but we wait for the 500 mil peak of leverage to deflate before accumulating again. So Kang highlights what I was talking about before, that the leverage ratio in the market is starting to creep up. Same thing happened with Arbitrum, especially through Upbit. You saw leverage starting to creep up. So he wants to see it deflate before he accumulates again. Liquidity Goblin said, I thought I'd run some numbers on this, so here we go. I thought ARB would be the anomaly, but interesting to see the OP comparison. This is market cap versus open interest. So ARB super high, open interest rise compared to other coins, but actually barely as high. Oh, this guy gave a good tip. Control-Alt-Delete, Alt-4 followed by 669. That's a good tip. So Arbitrum and Optimism quite similar. It's crazy how much leverage is in OP. I wish there was a way to tell whether it was short or long leverage, but there's not. The only way to do it's through a DEX, and DEXs don't have most of the volume the exchanges do. Another thing that's happening right now is AVAX ahead of their conference, gaining a lot of steam. Now this is a project that's on my alt strength list. So how I work. When I long alts, I long strong alts. Stacks is one of them. Injective is one of them. Trader Joe's one of them. AVAX looks to be one of them. If I buy, it's what I'm interested in. Why? Because I'm starting to see something. NFTs are ticking up. The social mentions are increasing. The NFT volume here you can see exploding. Some of it's artificial, but it generally has been a bit of a trend recently. Community's starting to gain a bit of steam ahead of this conference. I don't know if there's conference announcements or just a pre-conference run, but I'm keeping my eye on it. I'm keeping my eye on AVAX. I'm not fading it as a trade. Long term, not 100% sure, but someone said you're on chat delay. I don't think it's delayed. Frax had a token unlock yesterday. We tracked the most sizable recipients of the unlocked token. Frax is the token I want to accumulate long term. There's not many I always say there's not many tokens I accumulate long term. Frax is one of them. For me, this is a DCA coin. There's a lot of coins. There's a few coins for me that are DCA coins. And what this means is I have enough conviction to just buy and hold and not puke. Whereas I don't have conviction in every single alt to do that, which is why I keep my portfolio small. I like Frax, and it's one of these bets for me. I've got PYR in that category for gaming. I've got ETH, Bitcoin, a few other things as well. The beefy finance. I've got some smaller caps as well that I just DCA into and hold. A lot of the market I trade narrative based now, but there are some things I hold long term and DCA and just don't blink. This is one of them. So always looking at lower entries for Frax. Not buying now because I want lower. Like many coins, I think we do see lower at some point this year, and I would love generational accumulation opportunities on a lot of these coins. I'm waiting for that. This recent pump didn't give me those entries. It did some amazing trades for stablecoin profit taking, but not necessarily amazing entries. But you've got Dragonfly here, one of the major recipients. So we're seeing some of the big guys receiving their allocations. Some are dumping, some aren't. Keep an eye on price impact. It has dropped a little bit. But what we've seen from liquid staking is, look at Frax. It's actually been the leader of the liquid staking market. So Rocket Pool, rightly so, up 25%. I said a few weeks ago, this will be the strongest beneficiary because that's where I'm seeing most people want to restake due to its flexibility and its ability to compensate big players, as well as the Rocket Pool token being needed to spin up a validator. The Lido token is kind of a useless governance token. At least the Rocket Pool token you actually need. So I prefer it to Lido for that reason as a hold. But Frax, I think, is good. It's growing quickly. On the Frax ETH liquid staking side, now with the 292 mil TVL, used to be a tiny fish, a sub 1% fish. It's now gaining. It's above 1%. And we're seeing Frax ETH are now a sixth of the size of Rocket Pool, which is significant to note. So that's something I'm keeping my eye on as well. So I've got one more topic to discuss, and this is Bitcoin. It's a quick discussion, but it's interesting. Before that, I want a Bitcoin dumping, by the way. Ooh, scary, scary. Before we get into that, I want to remind you, if you do want to trade any coin on a DEX, if you're not, for some reason, I want to trade on the centralized exchanges, or if you just want to diversify profits on-chain, off-chain, you guys know I do this. I trade on, my OKXs, my ByBits, off-chain, but I also do on-chain trading because I spread out my funds. On-chain, you can use Apex, and they've got many pairs now. So if you want to trade Bitcoin, ETH, Arbitrum, XRP, Atom, Doge, on a layer 2, with a very fast execution, then do it. ByBit's introducing KYC. If you're the type of person that doesn't want a KYC, but still wants the general market experience of trading on ByBit, then I think going on a DEX is your next best bet. And that's why I think Apex is good, because it is ByBit affiliated. Literally on ByBit, if you go up to the top, click Web3 and then click DEX, it will bring you straight to Apex. So it's their official DEX partner. So that's a plus. The other plus is it's trade to earn. So if you click on T2E, the more you trade, the more banner tokens you earn. With your banner, you can claim USD rewards and then stake it to earn more. Or you can just swap back into USDC to trade more with. So if you're not trading on a DEX and you want to, I think Apex is one of the better options. And because of the order book style, you are going to get price discovery on chain. It means there's slightly less pairs because they need liquidity, but the liquidity they do have is good. And I know big players that use this. It's not just me. Like, I know big VCs that actually use Apex as their DEX option because of the liquidity comparative to other DEXs and the execution. So if you do want to trade on Apex, there's a link in the description to Apex, and you can trade all your decentralized coins over there. The Bitcoin topic is the last thing I want to discuss. This is weird. So I don't know why this is happening, and no one does. If you do, let me know in the comments. This is very weird, though. What we're seeing is Bitcoin addresses, dormant addresses that have been sleeping for years, starting to activate. So we saw this address wake up after 12 years with $27 million worth of Bitcoin. We saw this address starting to wake up after 7.7 years. Another huge Bitcoin address starting to wake up. Another huge Bitcoin address starting to wake up. This is the most heightened frequency of Bitcoin dormant addresses waking up I think we've seen in a long time. Like, if you go through Whale Alert, whenever they do a sleeping wallet waking up post, they have these sleep Z's. Z. So you can see, like, every 3 posts they're doing it now. So, like, okay, maybe not that much, but like, they also do a lot of other scary stuff. But we're seeing a lot of these sleep alerts of wallets starting to wake up. So all these wallets are waking up at once. We don't know why, but there's a reason. I doubt that it's just natural. I mean, it could just be like a natural distribution of a stat. Like, we have like a bias when we tend to see like certain events happening in quick succession of each other that, it must be for a reason. It could just be natural distribution of that stat, which is wallets waking up. Let's say 10 wallets wake up a month. It just happened to be that those 10 happened on the same day. Coincidence, basically. I don't know if it is, though. It seems almost... We're going to need to see if more keep waking up, but it seems too crazy to be true. I feel like there's a group of early Bitcoin holders that have for some reason decided to do something, or maybe it's the government that was stacking Bitcoin and they want to auction some. I don't know. I actually don't know. Let's look into why. A few people are saying US Gov. We'll keep researching why. There's no real way of telling, right? Because even if we go into the transaction, we don't know. All we can see is the receiver and the sender. Interested to do more digging on chain with this, but it kind of is a bit scary. I don't think this is like the reason for a Bitcoin dump. I'm not going to FUD like that, but it is a bit scary when you see all these wallets waking up. Are they going to sell? The other thing is it's not a huge amount of supply. Like, let's just add these 3 announcements up. It's 1K Bitcoin, 2K Bitcoin, 3K Bitcoin. It's a little bit of supply pressure. Nothing the market can't handle, though. So it's not like Mt. Gox. Certainly not as bad as Mt. Gox. Old wallets are moving around because of safety reasons. They are, but that should only really... There's no safety issue if you're on a Ledger or a Trezor. The MetaMask hacks with the wallet draining stuff we've been seeing are based on basically people not keeping their private keys safe. So if you had your private key safe, you have no reason to exit. Can these be from Mt. Gox? I don't think so. That's all in a treasury now. All the same whale. I think that's likely. It happened in quick succession. Either that or a group. Satoshi's broke. You need some funds. Well, if Satoshi's still alive, or the group of people that are Satoshi's still alive, then they would probably have a fuck ton of wallets. So I doubt he's broke though, unless he's living like some playboy with a mansion. And I mean, he probably is. He's a multi-billionaire. But I don't know. If you listen to my interview with Jeff Yu on the weekend, he doesn't even think there might be a Satoshi. He says Bitcoin just might be AI generated. That was super crazy. Listen to that. I know it sounds crazy, but listen to the interview I did with him. It was this one. One of the best, most interesting interviews I've ever done. Least views I think I've ever gotten on an interview. So it didn't get the clicks. But if you want some alpha that only 9,500 other people got, then watch this. Especially 45 minutes onwards. He talks about the future of AI. I'm actually going to upload that as a separate video, but I thought it was really cool. Yeah, you thought it was cool as well, MT. MD, you've got my initials. Miles Deutscher. MTMD. Let's just quickly, before I head off, look at the top gainers for the day. Casper pumping, BitGet pumping, Woo Network has been a strong performer. Render and Stacks, for obvious reasons. Frax, off the back of the LSD narrative. Immutable, not sure why. Some tokens just pump. Injective being strong recently. Optimism, a lot of leverage, but good. Worst performers, Radix, it's been pumping, so logical. PancakeSwap, I don't know why, off the top of my head. Phantom, Theta, I mean, these are small. So, like, basically the market's very flat. We have, coins that have performed really well, coins that have performed badly, but the balance is, like, basically zero. So most coins are, like, barely up. Like we can see here, very flat market today. Drop the link. It's on the channel. So if you just go to Crypto Banter and then go on videos, so not live videos, then it's the latest video on the channel. All right, I'm going to head off now because we've talked for too long and I'm probably boring you. But I hope you found this video interesting about the regional coin thesis as well as some of the altcoin stuff we covered. And hopefully my charts as well gave you a little bit more of an insight as to where we currently sit. Got to be a big week with earnings. We'll obviously keep you updated throughout the week. I'll be streaming tomorrow. And until the next one, I will see you later. Have a lovely day. If you're in Australia, happy Anzac Day. I'm probably going to go and have some lunch with friends today and watch the footy. It's a public holiday here. If you're in America, good night. And I'll see you tomorrow. Peace out.